So we're going to put negative 500 in the landscaping equipment because we lost lawnmowers. Number 6, the company wrote a check for $2,000 in partial payment of the amount owed to Eastern Turf Monsters. So if we wrote a check, that's going to be cash. If we wrote a check, that's going to be negative cash. So that's going to be negative 2,000. All right. So we wrote this check out to the people who we owe money to. All right. The people we owe money to is the definition of accounts payable. Okay. So it's accounts payable. Now, we are in less debt to these people. Therefore, it is going to be negative. Okay. Like I said before, the only time accounts payable is going to be negative is when we pay off our debt, when we are in less debt, which is this case. So we go up to number 6. We have negative 2,000 here, and then we'll put negative 2,000 in accounts payable. Number 7, the company provided lawn services for $1,200 on account. So if we provided lawn services, anytime we provide services, that is going to be revenue. Okay. We provided services worth $1,200, so our revenue is going to be $1,200. Like we talked about before, revenue is always going to be positive. So we provided these on account, so that means we didn't receive cash for it. Anytime we see on account, it's going to be accounts receivable or accounts payable, like I said. So in this case, we're providing the services on account, so they have to pay us. If they have to pay us, that is accounts receivable. If that is accounts receivable, they owe us $1,200. That is going to be positive, $1,200. Okay, so we will go up to accounts receivable, $1,200, and then we go to revenue for $1,200. There we go. Number 8, the company had to pay $200 cash in rent this month. Okay, rent is going to be an expense. That is something we have to pay to operate the business. Very cheap rent, but expense will be for $200. And that is going to be negative because expenses are always going to be negative. Now, if we had to pay cash, obviously the cash account will be affected. If we had to pay it, we're obviously losing it. So it's negative 200. At this point, we should be picking up on these relatively quickly. Okay, so it'll be negative 200 in cash. We will go negative 200 in expenses. Assets equals liabilities plus owner's equity. We're all good. 9, the owner withdrew $300 cash for personal use. We see the owner, so we know it's going to be either capital or withdrawal. Simple enough. The word withdrew is right there, so it's going to be the owner, Austin Pemberton. Withdrawal. And withdrawal is always negative, so it's negative $300. Okay. We withdrew cash, so the company is losing cash. That'll be a negative $300. Okay, so we go back up. Negative 300. And that should be it. Negative 300. Okay. Remember, we're not doing Austin Pemberton's accounting. We're doing the businesses. So Company X bought lawnmowers worth $1,000 from us, paying $500 in cash, agreeing to pay the rest on account. So if Company X bought lawnmowers worth $1,000 from us, we are going to be losing lawnmowers. That is going to be landscaping equipment. If they bought them from us, we no longer own them. If we no longer own them, we lost $1,000 worth of landscaping equipment. Okay, so they paid us $500 in cash. So if they paid us $500 in cash, we're receiving cash. We are going to be adding cash. Okay, so they agreed to pay the rest on account. So we sold $1,000 worth of landscaping equipment. We have $500 worth of cash that they gave us for it. Now they owe us $500. That's going to be accounts receivable because they now owe us $500. Obviously, $1,000